Meta's Q3 earnings took a surprising hit despite record revenue due to a massive tax charge. Here's what happened. Meta, the powerhouse behind Facebook, Instagram, and more, experienced a remarkable 26% surge in revenue, reaching a staggering $51.2 billion in the third quarter. This achievement set a new quarterly record for the company. However, a significant provision from the U.S.'s One Big Beautiful Bill Act cast a shadow over these impressive figures, causing Meta to fall short of Wall Street's expectations. The implementation of this act resulted in a substantial tax charge, leading to the recognition of a valuation allowance against our U.S. federal deferred tax assets, reflecting the impact of the U.S. corporate alternative minimum tax, according to Meta's Q3 results announcement. Consequently, the quarter's earnings were impacted by a one-time non-cash income tax charge of a whopping $15.93 billion. But here's where it gets interesting. Meta also anticipates a significant reduction in its U.S. federal cash tax payments for the remainder of 2025 and subsequent years, thanks to the same One Big Beautiful Bill Act. This suggests a long-term positive impact, even though the immediate effect was a substantial financial setback. As a result of the tax charge, Meta's net income for Q3 was $2.71 billion, an 83% decrease. This translated to earnings of $1.05 per share, a stark contrast to the analysts' consensus estimate of $6.69 per share. If the one-time tax charge were excluded, Meta's diluted earnings per share would have been $7.25, the company stated. Despite the financial challenges, Meta's user base continued to grow. In September, the average daily active users across its family of apps, including Facebook, Instagram, WhatsApp, Messenger, and Threads, reached 3.54 billion, representing an 8% year-over-year increase. This demonstrates the continued popularity and engagement across Meta's platforms. "We had a strong quarter for our business and our community," said Mark Zuckerberg, Meta's founder and CEO, in the announcement. He also highlighted the promising start of Meta Superintelligence Labs and the company's leading role in AI glasses, suggesting an optimistic outlook for the future. However, Meta's Reality Labs segment, which encompasses the Quest headset and other VR and augmented reality ventures, continued to incur losses. Q3 revenue for Reality Labs was $470 million, compared to $270 million in the previous year, while the operating loss remains significant at $4.43 billion. Meta concluded the quarter with a robust financial position, holding $44.45 billion in cash equivalents, and marketable securities. The company's headcount reached 78,450 employees as of September 30th, marking an 8% year-over-year increase. Looking ahead, Meta anticipates total revenue for Q4 to be between $56 billion and $59 billion. The company also projects full-year 2025 capital expenditures, including principal payments on finance leases, to range from $70 billion to $72 billion, an increase from the previous outlook of $66 billion to $72 billion. Furthermore, Meta expects capital spending to be notably larger in 2026 than in 2025, as it plans to invest more in computing infrastructure for AI than initially planned. The key takeaway? Meta's financial performance was a mixed bag, with record revenue overshadowed by a massive tax charge. While the company faces short-term challenges, it also anticipates long-term benefits from the U.S. tax changes and continues to invest heavily in its future, particularly in AI and the metaverse. Do you think this tax situation will ultimately benefit Meta? Share your thoughts in the comments.